now we continue a look here. We're going to get to IBM. We bring in George Tsilis, senior markets correspondent. What's on your mind when it comes to IBM, George?
Well, kind of mixed. I mean, if you look at IBM's actual performance year to date, Nicole, it was higher by about 11%. So this has been an outperformer in the context of this market sell-off. We're starting to see a little bit of a drift to the downside after initial move higher by about $15 on IBM. They actually posted some meaningful increases relative to the estimates in terms of earnings. The estimates were $1.42. They actually bested that by about 18 cents, coming in at $1.60 per share. But that was still down about 4.76% compared to the same quarter last year. So they were already coming into the quarter expecting to be down year over year in terms of EPS, and sales came in better than the estimates, $14.5 billion versus $14.4, but that was only an increase of about 0.5% compared to the same quarter last year. I think right now, if you look at the software business, they actually denoted slightly higher increase in software sales with revenues at 6.34 versus the estimate at 6.33. And then, of course, consulting revenue, which is their second largest division, at 5.07. I think the market is really looking for the generative AI business, because if you look at last quarter's numbers for IBM sequentially, they increased their AI revenue. That was quarter over quarter, by $2 billion to $5 billion, or about 25% of total sales for the quarter last quarter. So I think the market is waiting for that number, as well as the figures for free cash flow guidance. They guided last quarter for this quarter at $13.5 billion relative to $12.7 billion for last quarter.
Yeah, Dan Ives over at Wedbush highlighted IBM as a company that really could benefit from enterprise AI in 2025. And I'm seeing the stock, despite a double beat, down almost 3% here in the after hours. You know, I think maybe you're right. Maybe people are waiting to hear more about the AI business segments, the product launches, the new acquisitions they've been making. You know, the software business is all well and good. And hey, you like when you have money coming in. I can't deny that. But maybe people just wanted more?
Well, I think so. And I think that the challenge is, if you look at last quarter for IBM, they had such a remarkable quarter in terms of the AI-generated bookings that it's a tough comp to move against. And I think that maybe, and this is, again, maybe not just my opinion, but the way the market's performing, that infrastructure names in the AI space have drifted lower with the expectations of CapEx being pulled back. But one of the things about IBM, and I think this is the rationale behind why the stock has performed exceptionally well. I mean, first off, it's not growing very fast. And in fact, if you look at the revenue guidance for the year, they came in around 5%. So that's about mid-single-digit guidance. I had the estimates before the report around 4%. And in terms of EPS growth, they're expecting essentially very, very low, moderate EPS growth around 2%. Now, that could certainly change based upon the guidance the company may update as a result of this quarter. But I think that the market has appreciated this name because of the software, services, and consulting business, which is about 83% of total sales. So they don't have a lot of the hardware CapEx exposure that many of the other AI stocks have. I'm going to put Broadcom in that kind of mix, with that stock really underperforming this year, or at least year to date. Yeah. So for what it's worth, this company seems to be a little bit more isolated or immune to the CapEx hardware slowdown if it does manifest. And we'll probably see that happen with the hyperscalers posting earnings coming up shortly in the next few weeks. But nonetheless, I think the expectations for AI sequential growth were really high last quarter, and that's maybe why we're seeing a little bit of drift to the downside. But I haven't seen the free cash flow numbers yet. I'm sure a lot of analysts are waiting for that number because, again, they guided around $13.5 billion for the quarter.
Yeah, and I mean, it's time to go, but I will leave you with this, George. ServiceNow is up nearly 9%, and ServiceNow and Aptiv have now made a strategic partnership focused on driving intelligent automation and operational resilience across telco, automotive, enterprise, industrial. Sounds good. I think people are going to like that tomorrow. So it's up almost 9% right now, ServiceNow. So I'm sure we'll talk about that tomorrow. George, thank you.